Welcome students to this session. In this session, I will explain the recording of various transactions under Depreciation Fund Method, which is also called as Sinking Fund Method. That is, at the end of this session, you will be able to understand how different ledger accounts are maintained under Depreciation Fund Method. I have already discussed the journal entries recorded under Depreciation Fund Method in my previous video. Now coming to practical problem, you are given that on 1st January 2017, SAM Limited purchased a machinery for rupees 3 lakhs and spent rupees 5,000 on its installation. The expected scrap value of machinery is rupees 5,000 and it has been decided to provide for replacement of machinery by means of sinking fund. The reference to sinking fund table shows that 0.317208 at 5% per annum will in 3 years accumulate to rupee 1. So, the amount of depreciation in this case is equal to the depreciable value of an asset into the annuity value. Now, depreciable value of an asset is equal to the cost of an asset plus expenses incurred which are incidental to purchase of an asset, that is in this case expenses on installation, minus the expected scrap value. Now, cost of machinery in this case is rupees 3 lakhs. Expenses which are incidental to purchase, that is expenses on installation, are 5,000 and expected scrap value is 5,000. So 3 lakhs plus 5,000 minus 5,000, the depreciable value of asset comes to rupees 3 lakhs. Hence, the amount of depreciation is depreciable value into annuity value, that is 3 lakhs into 0.317208, the amount of depreciation comes to 95,162.40. That means every year rupees 95,162.40 is charged as depreciation. Now coming to recording of transactions in ledger accounts, 4 accounts that are opened here are machinery account, depreciation account, Depreciation Fund Investment Account, which is also called as Sinking Fund Investment Account, and Depreciation Fund Account, which is also called as Sinking Fund Account. The first entry in this case is recorded on 1st January 2017, that is for purchase of an asset, and the entry for the same is machinery account debit to bank account, and the amount spent on purchase is rupees 3 lakhs. The entry for purchase of an asset, that is purchase of machinery, is machinery account debit to bank account. On the same date, entry is passed for the amount spent on installation. The entry for the same is machinery account debit to bank account and the amount is 5,000. The amount is 5,000. The next entry in this case is passed on 31st of December 2017, that is at the end of the year, and the entry is for providing depreciation. The entry for providing depreciation is depreciation account debit to depreciation fund account and the amount of depreciation is 95,162.40. Since it is decimal figure, it's advisable to take up to 2 digits. The entry for providing depreciation is depreciation account debit to depreciation fund account. So when the same transaction is recorded in the depreciation fund account, it is by depreciation and the amount is 95,162.40. The next entry in this case is passed for amount invested in securities, that is under Depreciation Fund Investment Method. the amount which is set aside as depreciation is invested in securities. So the next entry is for amount investing the amount in securities, and the entry for the same is depreciation fund investment account debit to bank account. That is, when amount is invested in securities, depreciation fund investment account is debited and bank account is credited with the amount invested in securities, and in the first year amount invested is equal to the amount of depreciation, that is 95,162.40. The next entry is passed on 31st of December 2017, and that is to transfer the depreciation charge to profit and loss account. That is, depreciation being a nominal account, at the end of the year the account is closed and the amount is transferred to profit and loss account. That is, the entry to transfer depreciation to profit and loss account is profit and loss account debit to depreciation account. Now with these entries, accounts are closed for the year ending 31st December 2017. So when accounts are closed on 31st of December 2017, machinery account shows a balance of 3,05,000. Shows a balance of 3,05,000 and it's a debit balance. Depreciation fund investment account, being a real account, also shows a debit balance. Shows a debit balance. And the amount is 95,162.40. Depreciation account does not show any balance. Sinking fund account shows a credit balance. Sinking fund account shows a credit balance of rupees 95,162.40. Now coming to the next year, when accounts are opened on 1st January 2018, machinery account shows a debit balance of rupees 3,05,000. Depreciation fund investment account as on 1st of January 2018 shows a debit balance of rupees 95,162.40. Depreciation account does not show any balance, and depreciation fund account shows a credit balance of rupees 95,162.40. Now coming to accounting entries for the year ending 31st December 2018. The first entry on 31st of December 2018 is for providing depreciation, and the entry for the same is depreciation account debit to depreciation fund account, and the amount is 95,162.40. So when the transaction is recorded in the depreciation fund account on 31st of December 2018, it is by depreciation account and the amount is 95,162.40. The next entry is recorded again on 31st of December 2018, and that is for receipt of interest. That is, interest is received on 31st of December 2018 on the opening balance of investment. That is, in this case, opening balance of investment is 95,162.40. So on 31st of December 2018, interest is received on 95,162.40 at a rate of 5% per annum, which comes to 4,758.12, and the entry for receipt of interest is bank account debit to depreciation fund account. That is, interest received is debited to bank account and credited to depreciation fund account, and the amount is 4,758.12. The interest is calculated on the opening balance of investment. In this case, opening balance of investment on 1st January 2018 is 95,162.40. So 5% on that. The next entry is passed for investing the amount in securities. So on 31st of December 2018, the amount set aside as depreciation and the interest received for the year is invested in securities, and the entry for investing the amount is depreciation fund investment account debit to bank account, and the amount invested is equal to the amount of depreciation plus the amount received as interest, that is 4,758.12. So total amount invested in this case is 99,920.52. That's for investing the amount in securities. The entry for the same is depreciation fund investment account debit to bank account. The amount invested is equal to the amount of depreciation plus the interest received for the year. The next entry is passed on 31st of December 2018, and that is to transfer the depreciation to profit and loss account, and the entry for the same is profit and loss account debit to depreciation account, and with that actually depreciation account is closed for the year ending 31st December 2018. Now when machinery account is closed for the year ending 31st of December 2018, machinery account shows a balance or debit balance of rupees 3,05,000. It shows a debit balance of rupees 3,05,000. The depreciation fund investment account as on 31st of December 2018 shows a debit balance of rupees 1,95,082.92. It's 1,95,082.92. Depreciation account does not show any balance. Depreciation account does not show any balance. Depreciation fund account as on 31st of December 2018 shows a credit balance of rupees 1,95,082.92. With these, accounts are closed for the year ending 31st of December 2018. Now when accounts are opened as on 1st of January 2019, machinery account shows a debit balance of 3,05,000. Depreciation fund investment account as on 1st January 2019 shows a debit balance shows a debit balance of 1,95,082.92. Depreciation account does not show any balance. And on 1st January 2019, depreciation fund account shows a credit balance of rupees 1,95,082.92. Now coming to the year ending 31st December 2019, the first entry is passed for providing depreciation. The entry for the same is depreciation account debit to depreciation fund account, and the amount is 95,162.40. The entry for providing depreciation is depreciation account debit to depreciation fund account. So when the entry is recorded in the first account, fund account, as on 31st December 2019, it is by depreciation account, and the amount is 95,162.40. The next entry is on 31st December 2019, and that is for receipt of interest. On 31st of December 2019, interest is received on opening balance of investment. Here opening balance of investment is 1,95,082.92. 5% on this amount comes to 9,754.15, and the entry for receipt of interest is bank account debit to depreciation fund account. That is, amount of interest received is debited to bank account and credited to depreciation fund account. Interest is calculated on the opening balance of investment. So entry for interest received is bank account debit to depreciation fund account, and the amount is calculated on the opening balance of investment. That is, in this case it's on 1,95,082.92 at 5%. Now these being the last year, there is no entry for investing the amount in securities. The next entry is recorded on 31st of December 2019, that is to transfer depreciation to profit and loss account. Transfer depreciation to profit and loss account, and the amount is 95,162.40. Now with this, depreciation account is closed for the year ending 31st December 2019. Now the next entry here is for sale of investment. That is, you are told that at the end of the third year, investments are sold and the amount realized is rupees 1,90,000. So the next entry is for sale of investment, and the entry for sale of investment is bank account debit to depreciation fund account. It's bank account debit to depreciation fund investment account, and the amount realized on sale of investment is 1,90,000. That is, when investments are sold, bank account is debited and depreciation fund investment account is credited with the amount realized on sale of investment. Now once investments are sold, investments account is closed, and if there is any balance in the investment account, it is transferred to depreciation fund account. That is, in this case, when depreciation fund investment account is closed, it shows a balance of 5,082.92. Now this amount is transferred to depreciation fund account. That is, this indicates a loss on sale of investment. This indicates a loss on sale of investment, and loss made on sale of investment is debited to depreciation fund account and is credited to depreciation fund investment account. That is, The entry for loss on sale of investment is depreciation fund account debit to depreciation fund investment account. So when the transaction is recorded in the depreciation fund account on 31st of December 2019, it is to depreciation fund investment account, that is loss on sale of investment, and the amount is 5082.92. The amount is debited to depreciation fund account. Now with this, depreciation fund investment account is closed. Now please note, if there is a profit on sale of investment, then depreciation fund investment account is debited with the amount of profit and depreciation fund account is credited with the amount of profit. Now next, here the depreciation fund account is closed, that is the depreciation fund account is closed by transferring the accumulated depreciation to the asset account. That is, at the end, the depreciation fund account is closed and the balance is transferred to machinery account. In this case, depreciation fund account is showing a balance of 2,94,916.47. For all practical purpose, this indicates an accumulated depreciation on machinery. And the accumulated depreciation is transferred to machinery account by passing an entry depreciation fund account debit to machinery account. So when the same transaction is recorded in the machinery account on 2019, it is by depreciation fund account and the amount is 2,94,916.47. Now once accumulated depreciation is transferred to machinery account, the depreciation fund account is closed. Okay. The next entry here is recorded as on 31st of December 2019, that is for sale of an asset as scrap. In this case, you are told that the asset is sold as scrap for rupees 3,000, that is machinery was sold as scrap for rupees 3,000. So the next entry is for sale of an asset as scrap, and the entry for the same is bank account debit to asset account, and the bank account is debited with the amount realized on sale of an asset and machinery account is credited with the amount. The entry for sale of asset as scrap is bank account debit to machinery account. Now once an asset is sold as scrap, then the asset account is closed, that is in this case machinery account is closed, and if there is any balance in the machinery account, then it is transferred to profit and loss account. That is in this case, machinery account shows a balance of 2,083.45. This is 55. This comes to 55, please note. So the balance in the machinery account is transferred to profit and loss account by passing an entry profit and loss account debit to machinery account. That is, this indicates a loss on sale of machinery, and the loss is debited to profit and loss account and credited to machinery account, and with that machinery account is closed. Now in case if machinery account shows a profit, then the machinery account is debited with the amount of profit and profit and loss account is credited with the amount of profit. So with this, the machinery account also closes, and with the recording of these transactions, all the 4 ledger accounts that are open, that is machinery account, depreciation account, depreciation fund investment account and depreciation fund account are closed. Thank you.